So basically, what I do in Thinkorswim, sorry, I'm trying to get to it. I have two screens that I look at. I'm going to put it all on one screen for you guys now. But on the left-hand side, I have this watch list, right, called ATR greater than 2. And I shared this with you in the announcement. So all you have to do is import it into Thinkorswim and then open a watch list. And I always forget like how to do shit on Thinkorswim because I don't really use it much. But anyway, there's a way to apply this watch list. I think it's down here. Yeah, like you create a watch list. I don't know. Fucking hell. Oh, so yeah, you just click this and then like literally left click and then go to personal and you would choose ATR greater than 2. And again, I gave you guys the link, so you just import this into your Thinkorswim. And then from there, open a watch list, click on the watch list name, go down to personal, choose ATR greater than 2. And what ATR greater than 2 means is anything that has an average true range of 2 points or more in a day is going to show up in this list. So I'm just looking, for ticker symbols that have, that have a few parameters. Basically, I want stuff that is liquid, right? Where it's getting movement every day. And anything, over 2 points or more is good enough for me to day trade. And then every single one of these are optionable, meaning that you can purchase option contracts on these tickers as part of the watch list that I shared with you. So those are the two factors that I'm looking for, things that are liquid and things that have a range of 2 points or more in a day. Once I've done that, what I do is you'll see, this is kind of hard for me to show you guys, but there's no real good way for me to do this. On Thinkorswim, I have it set to the color red. I mean, you can choose any color you want. And on my grid up here, I have all of these set to red, which just basically means when I click on one symbol, every single one of these charts changes to that symbol. Okay. And basically what I do is, sorry, I'm going to make this full screen again. I'm normally looking at this chart on a 49-inch ultra wide, so that's why it's so huge. But basically, I'll click Apple, and then from there, it'll pull up Apple on every single chart. And this is like 5-day 3 minutes, 5-day 10 minute, 5-day 15 minute, 5-day 20 minute, 30-day 30 minute, 30-day 1 hour, 30-day 65 minute, 30-day 2 hour, 30-day 4 hour, 1 year 1 day, 3 year 1 week, 10 year 1 month. So each candle's a month, each candle's a week, day, 4 hour, 2 hour, so on and so forth. All right. And what I'm looking for. Oh, and also, I should say this really quickly. I gave you guys a link to this grid where I forget exactly how to do it, but like I'm sure you could Google it. I don't use Thinkorswim a ton. I used to be like pretty proficient with it, but basically I know here you're gonna pop out like a chart like this, and then once you've done that, there's a way to import that grid that I shared with you guys. I just forget how to do it. If you guys can't figure it out, I can figure it out and then I can tell you guys how to do it. But right now I don't remember. But basically, you're going to want to either recreate this grid or import the one that I gave you. And once you do it, this part's annoying. Like you have to go grid by grid and add the full send indicator. And you want to make sure that all of these candles are set to what's it called? Where's the settings? So they're all ashy candles. Um, anyway, if you import it, it'll do it automatically. You'll have ashy candles, the correct time frame, and then import the studies for full send. So with all of that said, I can't publicly post the grid with the full send indicator already attached to it. If I do, then I would be giving anybody that doesn't have access to the full send indicator access to the full send indicator. So what I can do to make things easier for people, because it's a pain in the ass to set this up, is if you DM me and DM me like a screenshot that you did purchase, you know, the full send indicator and everything from Shorty, I can just give you the grid with the full send indicator already attached to it. And that way, when you import it, it's already, everything's there and you're not having to, you know, add or remove stuff or whatever. But that's the only way I'm going to be able to do it is like on an individual basis, one by one. So, again, if you want that, just DM me, show me proof. I'll send you the grid with Shorty's indicator already attached to each chart. Ugh. Okay. So all I'm going to be doing now is going through the symbols to see if I can find like full sends. I'm going to do that on my other screen. That way I'm not having to go back and forth between screens, but you guys will see, you know, like as I click that each chart is going to refresh with, you know, the full send showing and whatever else. This part is really tedious because you never know, like, if you're going to find setups, but at least it's really fast, right? You can click through, the way that I've set it up, you can click through the charts really quickly. And even if we don't find anything, we'll just, I'll still show you guys how I apply what I'm seeing. And then that way, you know, you can learn how to do it for yourself. I will say using this method, I generally am finding more reasons to not trade a ticker than I am finding setups, if that makes sense. So like, oh no, it just went away. We kind of have a setup here on AVG Go, or AV Go, I mean, but it's not terrible, and we can always use it if we don't find something else. I would rather find something a bit better, but we can use this worst case scenario if we don't find something else. But basically, I'm not really looking at the lower time frames. These would be like, if you really want to trade AVGO and like you're watching this, you know, like minute by minute, and you start seeing full sends pop up on these lower time frames, then you could trade them, you know, like intraday. The 30-day, 30 minutes and higher, I'm really watching like from 30-minute to 4 hour. So like these 5 grids here are the ones that I'm really watching for day trades and swing trades. But obviously I always look at the big picture, so I'm looking at everything. But I ultimately want to see full sends on 30-minute all the way to 4 hour. And when I see that, I know we're about to get a massive move. So like if you guys follow me on YouTube, the last time I called out a big move on, I think it was Netflix, was there was a full send on 30-minute, 1 hour, 65-minute, 2 hour, 4 hour, and I think 1 day as well. And maybe even 20 minutes. So it was like everything was showing a full send. And that's how I knew like we were most likely going to get a big move. I might just use the AVGO one really quick. Let me see. So again, like this part's tedious, and you're not necessarily always going to find something, but it works well enough that it's worth whatever the 15-30 minutes that you have to invest in looking at these charts. So we might have just found something here as well. IWM. So I think this one's better than the AVGO one, but it's still not like ideal. Basically, with the full send, you want to see it hit and then start going. You don't want to see it hit and then, like get a candle up and then back down and start kind of chopping. It almost looks like they're forming like a bear flag here. So to me, it's just not ideal, just like a quick glance. And like I said, basically, I use this to eliminate more trades than I actually take, where I'm just looking for like super high confluence trades that are going to be more likely to work out than not. And again, like for people that follow my YouTube, you see it where I just call out, option setup after option setup where they hit, and this is the same process that I go through. We might have to go backwards maybe and look at like one that worked, but doesn't really matter ultimately. And then we're also going to talk about like the different type of setups that you look at on the clouds. Hopefully like we find something decent. This isn't bad, other than the fact that we've missed, like part of the move. But Palo Alto has a tendency to like be kind of choppy in general, I guess, and then it'll give you like a big move. So maybe we'll use this one because we have full sends on 5 time frames. So this is kind of exactly what you're looking for. I just like to catch it when it's closer to the top. And again, hasn't done all of this, but it's not terrible. That's probably going to be the example that we use if we don't find something better. So snow's looking good on like the higher time frames, but I think again Pan W is better as far as more confluence right now. But we could ultimately look at both. All right, let's do Pan W. And we'll start with, let's see, let me make this full screen. So what we're looking for generally is going to be the full send indicator is based on Elliott waves, right? And it's doing the math for us. And so with Elliott waves, you have the first wave to the second wave to the third wave. the fourth, or the third to the fourth, and then the fourth to the fifth. The full send triggers on the fourth wave to the fifth wave, because generally the cleanest move is going to be fourth to fifth. And also the move that's going to be the largest move is going to be fourth to fifth. And what you're looking for is wherever your third wave prints, your fourth wave should go higher than that, right? That would be completion of the Elliott wave, is once we've broken above like this high. Or if the third wave prints on the bottom, then we should be going lower than the third wave. And that's kind of how you figure out like your target for price. When you're looking at a trade setup, you're knowing that price should go higher than the third wave, or again, if it's on the bottom, like we're taking puts, then price should be going lower. If the full send shows up at the bottom, then we're looking for calls. If the full send shows up at the top, then we're looking for puts. And so like, here's a pretty good example where the full send showed up here. And if you took puts, it literally just barely broke below the third wave before it reversed, right? So I'm generally wanting to close at the third wave or a little bit before, just to lock in my profits and get out, and not trying to take it lower or take it higher, if that makes sense. So with that said, again, I'm looking for preferably like 30-minute full wave and more. In this case, we're not having the 30-day, 30-minute, but we have 4 full sends on higher time frames. And then this is what I would be interested in. Once I have this, actually in this case, I wouldn't be interested in this trade, and I'll show you why. But once I have that information, then I go to my chart here where I have my watch list. I also have the straight clouds. And so you're also going to want to just import your straight clouds on here. And then if we go, where is it? Oh my gosh, this is so frustrating. Studies. I haven't done this in so long. So you can see under studies, I have a 4-hour daily, weekly, monthly, and quarterly clouds on my chart. And all you do is like, you would import your flat cloud, and under the settings, you can adjust the time frame here to whatever you want. But for me, the clouds that have seems to be the most important are going to be the 4-hour, the daily, the weekly, the monthly, and the quarterly. You could always do lower time frames. You're just not going to have as good of results using lower time frames. So these are the ones that I'm interested in, right? And basically, when I have a full send, I want them to line up with the clouds, right? So like a full send up here I would be super interested, because we're coming up and we're tapping the daily top. And again, I'm just like using a scenario, but if this was an Elliott wave, like my 3 would be here, right? And I would be grabbing the daily top, and the 3 pretty much lines up with the 4-hour top as well, right? And so I could close there, and that's kind of basically what I look at, right? And so once I have, again, those full sends on multiple time frames, and we're either coming up to like a good resistance area for clouds and it's a full send down, I'm interested in puts. If we're coming to a support area, like the whatever daily bottom, I think this is our quarterly bottom. Yeah. Quarterly bottom, I'm interested in grabbing calls, but I want everything to line up, right? I want the full send triggering. I want coming up to clouds. I don't want a bunch of resistance above. So like this here with the quarterly, I probably wouldn't be interested in it because I have the daily cloud right above. And then above that, I have the 4 hour bottom and the 4 hour top and so on and so forth. I want free space. I'm not even too worried about the 4 hour. Like if we were coming down to the daily bottom here, I still consider this free space where the 4 hour cloud is, right? Where we can get a good move from one side to the other. Is this making sense to everybody? Any questions? Okay. So once I have those things, then at that point, I'm going to go over to TradingView. And let's just say I'm generally either looking at the 30-minute or the 1 hour. And basically all I do from here is like, in this instance, we had a full send down, right? Yeah. And so our full send down is saying we should be going lower than this here. With that said, to me, this is a strong bottom, and I'm not interested in taking it all the way down to there. And so basically I'll figure out like where I would want to close my trade, which would probably be right here. I'm okay with not catching the entire move, especially with options. Like I want to sell into strength when the option contract is still increasing in value versus once it starts reversing, option contracts lose value very quickly, right? And so I would rather sell into strength and get out like good versus trying to rush selling it as the value is decreasing, right? So then basically once I get to here, I don't know, for me, like things start getting pretty simple. Like we obviously have like support. And even if we go left here, we have support here, right? Boom, boom. Then here it's turning into support again, but it's forming, like a weak bottom right here. So once price loses this is when I'm going to be hopping into the trade, right? And so then I figure out like, okay, at what point do I say we've definitively lost this level? And, let's just say like 55 cents versus 81. At this point, if we lose, 194.55, I'm pretty confident that we're going to be seeing more downside. Of course, there's always a chance it's a fake out and they're going to, bounce it, but whatever. We just have to play our probabilities at that point. And then once I've done this, I just start figuring out areas where I want to trim my trade based on, what candlesticks are doing, so on and so forth. Again, I'm not loving this setup. So like, it is what it is. But this is kind of, if I was taking this trade, this is kind of what I would be looking at. And if you guys are not understanding like why I'm choosing areas to trim, let me know. But basically I would be happy, getting 194.55 down to 192, we'll say 192.50, and closing my position there, or closing one contract, leaving runners down to 91.38, closing a contract down to 90.37, closing a contract, and then I would be all out at 187.89, right? Make sense, everybody? You guys are very quiet. All right. I guess no questions means that it's making sense. So that's really just how I use a combination of full send, the clouds, and, my regular candlestick chart to find setups and trades that I'm interested in. Now, with all of that said, I'll just explain like how the clouds work. Why do I feel like... Hang on, bear with me really quick. Hopefully I can do this really quickly, but oh no, that's not what I wanted. All right. Okay. So, for our clouds, and then also, I would highly recommend on your clouds, you want to go and change all of it to the same color, right? So like for our 4 hour, you want to change all of it to the same color. And then that way, you know, any cloud that's a specific color is going to be whatever, like your 4 hour cloud. Um, I have, you know, like for me, my 4 hour is that orangey reddish color. My daily is the light blue. And then my weekly is green. My monthly I have is orange. And then lastly, my quarterly is going to be yellow. But again, like the specific color doesn't matter. Just make them all the same. Um, and then you'll get used to what's what based on the color. Okay. Um, so with that done, I mean, we can clean this up really quick. So like, you can hide, um, you know, like we can hide some of these, right? And then that way we're going to have like a cleaner chart to look at. Um, and then, actually I'm going to do this on a higher time frame where, let's do this. So with our clouds, if it's this darker gray color, that means they're closed. And when they're closed, basically means that despite like something like a news event, it's going to be very difficult for price to pass through it. And even when they're open, it's not bad. Like if you see price coming up to like a significant cloud, like the daily cloud, weekly, monthly, quarterly, you can pretty much, grab like puts there, calls here, so on and so forth. But of course, it's way better to use it with Confluence, like with the full send indicator. And the more confluence you have, the more likely your setup is to work. So with the clouds, there's a few different setups we're looking at. One is going to be sorry. I'm trying to think of what's what right now. I haven't talked about this in so long. Okay, I got it now. So our money shot, which is money shot means it's happening between the clouds. So what you're looking for is break below the cloud, come back, retest, and then you should go from one side of the cloud to the other, right? And so in this case here, we come inside, we retest the daily top, and from there we go all the way down to the daily bottom, right? So this would be a bearish money shot. When we break inside the cloud, retest, then we have a bullish money shot where we would be playing from one side to the other, right? And then lastly would be the bearish and bullish backdoors. And those, sorry. So like this is a bearish backdoor here where we break below, come back and retest. This is where you would take puts and then you play it down, right? You would have to look left for your targets. We don't have, clouds below the clouds. And then the same thing here, like our bullish backdoor is break through the cloud, retest, and then go long or grab calls. Okay. Anybody have any questions? Which you only have the flat clouds? They are, and I would ask Shorty if he can give you guys access to these ones. I don't see why he wouldn't. But I'm not going to make that call for him and give it to you. But I would literally hit him up because it's the same indicator. Just on the flat ones, they're a lot cleaner to look at, right? So like it's kind of good to look at both. The flat ones just look nice and clean, right? But with the ones that actually move, like, I don't know, it just gives you more information, right? Like, even like looking at, like what a stock has done historically based on the clouds, just gives you a lot more information, right? So yeah. Yeah, he didn't give it to you? Did anybody else not get full send? Okay. Yeah. Well, I don't know if he was planning on including the full send indicator in the package, but I think the last time he sold, the clouds and everything, it was the clouds and the full send indicator. I would just like hit him up and ask him. I'm sure he'll give it to you. Like, it's not a big deal. I'm kind of surprised that he didn't, and I'm also kind of surprised that he didn't give you guys the regular clouds as well, but it might just be because, everything going on with his mom. Yeah, I mean, Yeah, I would wait for him to come back and then send him a message about full send and also the regular clouds. And again, I don't see why he wouldn't give it to you guys, but yeah, I would want access to both the flat clouds and these clouds. Actually, realistically, I would rather have access to these clouds than the flat clouds. Like if I had to choose one or the other, I would want this, you know, and not the other way around. But the flat clouds are nice and clean though. And then the last thing I can really show you guys, this isn't anything major, but under scan, you can apply so did Shorty give you guys like a guide or anything? Like did he give you anything, or he just gave you the URL for the clouds? Okay. Yeah, so okay. So yeah, I don't know exactly what he sent to you guys, but you can set up your scanner with the clouds, and you just where is it? Trying to, oh, so right here you change, like this one I'm looking at quarterly, but I can change it to, like whatever cloud I want. And then I can change it to the bottom or the top, depending on, like if I'm looking for calls or looking for puts, and then you hit scan. And this will basically just pull up, every, I guess futures as well, but everything that's at the monthly bottom, right? To look for, like either to buy shares of a company or to look for options. And you can choose up here where it says scan in all optionable. And that will just make it so that you're only seeing things that have option contracts. If you're looking to buy contracts, then you can change it to, like all symbols, all stocks, whatever it is. It doesn't have to be optionable, depending on what your purpose is for the scan, right? So this is really powerful, and worth looking at, as far as, like your longer term investments, buying shares, whatever else. Yeah. There's actually some pretty interesting stuff that I'm just seeing at a glance that's at the monthly bottom right now. So I also am noticing, so like Craft, we just bought Craft, right? But it's already bouncing, like KHC. Yep. Yep. You should get shares for each company. Yeah. I mean, basically, what would happen is like, let's just say right now it's worth $30 just to make things even and easy, and they split into two different companies, then you should end up with shares. Like, if you have 100 shares worth $30 a piece, then you should end up with, 100 shares of each company worth 15 a piece. Just for, well, it's not going to be as simple as a 50-50 split, but they're gonna do their valuation of each company and what the stock is worth at the time, and you're going to end up with shares for both companies. Make sense? Yeah. But one will be worth, I mean, they're going to be worth less than, they'll equally be worth the same as whatever it's currently trading at, but separately they're going to be worth less, right? But you'll end up with shares in both companies, basically. Alrighty. I think that's it, unless people have any questions. Any questions? It is. It's on YouTube, yeah. So that the link I have posted, like if you go to announcements, you can click this YouTube link and it'll be there forever. Yep. Anybody else have any other questions? I have a couple of people that DM me, so I'm going to see if... Okay. So, Corey, I'm going to have to hold off on that until I make sure that Shorty is okay with you guys having the full send indicator. Oh, and then Push You, like, you should have spoke up. We can talk about the 80% rule really quickly. And then it'll be recorded here so you can always reference this video. But yeah, 80% is pretty simple. Let me see. The only issue is finding like the last time that it worked, but let's see. Okay. So if we do this, and then let's hit replay. Actually, let's do this. All right, so for the full send indicator, right, or for, I'm sorry, for 80% rule, we're always looking for, like it's going to be one of several things, but like either, you're either looking for 80% on previous year, previous month, previous week, or previous day. Previous day will normally play out in a regular, day trading scenario, like in a intraday. You'll get the 80% rule from one side to the other. The only exception to that would be if, like let's just say we have a trend day where we got like a really big move and your daily profile is really wide. In that instance, it's not very likely that the 80% rule is going to play out in one day, right? So use some common sense, but generally our daily 80% rules will play out in a single day. The, like our weekly, monthly, so on and so forth, you're going to need more time if you're trying to catch the full move. And again, you just kind of have to use your common sense. So like, let's just say I'm looking at like a weekly full send and like, we'll use ES as an example. And we'll just say like, it's roughly like an 80-point move. What I'll do is I'll go back historically and look at how long it takes for 80 points to happen on ES. And like in this case, it's basically 2 days, right? So then I can safely, again, we're not going to do it on ES because you can't swing trade futures. But if you're looking at options, like at this point, I would say pretty safe if I grab option contracts like 4 days out, that I should be able to catch the full move, right? And so I just kind of use common sense of how long it normally would take the stock to, get a big enough move for whatever amount of points it is that I'm looking for. And then from there, I kind of figure out, how many days I need on option contracts or how many weeks. And then I'll generally add, like if it's 2 days, I'll add 2 days, right? I'll double it. If it generally takes a week for the move, I'll double it and grab 2 weeks out, so on and so forth. And so then what we're looking for is, and people always get tripped up on this part, which I don't understand. We want price to spend at least 45 minutes outside of the value area, whatever value area that it is that we're looking at, right? So in this case, we have more than 45 minutes outside of our previous day value area high. It could also be below, right? We're looking at 45 minutes below. So we're either taking 80% from the bottom to the top or 80% from the top to the bottom. Once we've spent 45 minutes outside, what we're looking for is, and actually, I'll switch to, it went way too fast. So once price comes back inside, we're looking for it to spend 15 minutes below and then retest either the, like if we're taking puts, we want a retest of the high. If we're taking calls, we want a retest of the low. I don't like to see this, right? Where, let me do this. So like when we broke below the previous day high, we went back above and then closed. And then the next candle wicks back down and we close below. The next candle touches it. The candle after that breaks above and then closes just barely below. I like to see a clean break, right? And then from there, I want to see at least 3 5-minute candles where we're not wicking back above and where the full body of the candle is closing below my previous day value area high or whatever it is. And then at that point, I want to retest. And then I'm going to be grabbing puts here, right? So I'm not liking the initial reaction here where we're wicking through and closing above and wicking back below and da-da-da-da-da. I want to see it nice and clean. But so here we get a nice clean break below. And at this point, like my candles are closing below. They're not wicking back above. And so now at this point, I have 3 5-minute candles that have closed below my previous day high, and they haven't wicked back through or touched the previous day value area high, right? So now at this point, if they give me a retest, which I think they do, this is where I would enter puts right here, right? And now we're just waiting for it to go down to the previous day value area low, and that's where we would close. I will say, I mean, I already know. So here we're out, right? I think it tapped it to a T. My previous day low is at 91.75, and the low is 92. So no, I'm actually still in the trade. But I will say, even though I know this is going to break lower and like we're going to get out good, with any trade, like for me, for ES, I do a 1-point range on either side, right? So me, I would have been out of this trade. But if you're being technical, right, like this will end up hitting the previous day low right there, and you would have got out of the trade. Make sense? This? No. No. So again, what we're looking for, I don't, so when I see this happen, I won't take the trade, right? And if you look back historically, like when you see this, and actually this is a perfect example, right? We broke below, this is our first 5 minute close, this is our second, this is our third, this would be our retest, right? And if you got in, especially if you're doing options, right? If you're trading options and you got in there and then price does this, like what is it, what is theta doing at this point, right? Exactly. And if you wait for the cleaner setup where we retested here, yeah, you're red for a second, but overall, your contracts were gaining value the entire time, right? It wasn't too terribly choppy. And this was the move to take. This was getting in early. This is being impatient, right? And so just from my experience, like of watching this over and over and over again, I know when price is chopping like this, and like going back above, even if it's just a wick or even if it's just touching it, that the probabilities of it working out are not good. But when I see like this clean break that we get on this candle, and then like candles closing below, and then we finally retest it, like that's going to be the setup that I'm looking for. I always look left, right? So to ask me my stop loss is going to be a loaded question, and I'll do my best to explain it to you, like as quickly as possible. But I'm going to also recommend something to you, which is to read a book, if you haven't. Volume Profile by Trader Dale, right? When we're talking about stop losses, I mean, first of all, 80% rule, we're ultimately looking at this trade setup where resistance breaks becomes, I'm sorry, support broken becomes resistance. This is literally the setup that we're looking at, right? And you'll see in his scenario, like we're having several candles closing below before we retest and take short. We're just giving it like specific parameters where we want to be above our level for 45 minutes, break below and spend at least 15 minutes below. The reason for that is if we spend 45 minutes outside of value, come back inside and spend 15 minutes inside of value, there's an 80% chance that the participants in the market are happy inside that value area and that you're going to go from one extreme to the other, right? So then this would be the inverse for calls: resistance, broken, again, several candles above, retest, enter long or enter calls. And then when we start talking about stop losses, you want to go to basically the part of Volume Profile where he talks about pin bars. This is stopping volume, right? Or also referred to as a strong high. Again, stopping volume also referred to as a strong high. Stopping volume referred to as a strong low. Stopping volume referred to as a strong low, right? And then the other thing that we're looking at is, so here's like our strong highs. Most likely price will not come back down to here. So you want to kind of close at the body of the candles here, because we don't expect price to come all the way back down to our strong low. Same thing, strong high here. You would close at the body of the candles, and you can see like we barely wicked past it and then sold off. Our weak highs, we expect price to break through and go higher. The only thing I don't agree with, and again, like this is kind of splitting hairs, but you can see here, like we have our strong high. He's closing his position. I would have been targeting here, and obviously I would have been wrong, but he's saying down here to close. our weak high, he's saying common mistakes is closing your position at the weak high. Unless I have data to the left that says like, hey, we might come up and hit a certain level, I generally do close equal with my weak high. When I have a strong high, I'm going to close earlier because I don't expect price to go back to that same level, right? But that, again, you can take with a grain of salt. Either listen to me or you can listen to Trader Dale. It doesn't matter, whatever works best for you. But you want to read basically like page 25. I mean, you want to read all of Volume Profile, but you want to start memorizing from 25 to, I believe, right around page 60. And that's going to be all of your setups that you're interested in taking trades off of, and where to close your position based on what you're seeing on the charts. So now that we've talked about that, if I'm looking for a place to stop out of my trade, I immediately look left and say, like, where might they bring price if they're trying to stop me out? But it also has to be within, like, where I'm getting double the reward for my risk, right? So if this is my take profit, the first place my eyes go is like this candle. Actually, let me actually grab the candle, but it goes to this candle here, right? And I know, like, if they're trying to fake me out, they're probably going to come above that and then reject and go lower. So for me as a trader, I say, like, if I can put my, hide my stop loss behind this candle, that's always the key for me, is where can I hide my stop loss? Because again, if they're trying to fake out retail, they're going to come up a little bit above this candle and then they're going to make the move, right? So where do I hide my stop loss to where they're not going to hit me? Again, I look left. I figure out what I think might be like, like my next key resistance level. And if you kind of look here, this is roughly support, broken, turn to resistance, right? So I want to hide my stop loss behind that. Or even better, if I can, if I have a candle, like up here that's like a strong high, let's say, like, if we kind of erase everything to the left here, and I've got this nice strong high there, I want to hide my stop loss behind that, right? Because most likely, if there's a strong high that we know that based on what we just talked about, they're probably not going to come to that level. And so as long as my stop loss is hidden behind it, then I'm probably not getting stopped out. And if I do, like, I'm not leaving like a huge amount of space between the strong high and my stop loss. If they do manage to break over this, most likely my trade's invalidated and we're going much higher, right? If they come, to an equal high and make like a double top like this, they're probably going to smack it down from there, right? Because that's what they did the last time they hit this strong high, was they smacked it down, right? And so that's what I would expect to happen. If they break over this strong high, my trade's probably invalidated and I want to be out of the trade, right? And so that's how you want to think as a trader, is like, like a lot of people go into like, I don't even know what to call it, like hope, or like they start praying like, oh, please, please, please reverse. Don't be that person, right? Is my trade still valid? Yes or no? If it's invalid, then you want to be out of it. If your trade is still valid, you want to be in it, right? And we're just playing probabilities. We're just playing based on math. We're just playing based on probabilities. And as long as my trade is still valid, as long as we're below that strong high, I have every reason to be in the trade, right? Once we break above that strong high, my trade's invalid. I'm going to give them a little bit of space to, like, if they're trying to fake out retail. But for the most part, I'm probably going to get stopped out if we break above that poor high and go higher. And at that point, my trade's invalid. It is what it is. I look for the next setup. Make sense? Yeah, no worries. So memorize those pages in Trader Dale. Okay. Mm-hmm. Anybody else have any other questions while you guys have me here? Yep. Sure. So, I mean, we have it here, right? So, in this instance, price is increasing, right, as we're coming up to a key resistance level. Sorry. And as we're coming up to that resistance level, volume is decreasing, right? What you ultimately want to see, but you don't know this until you're in the trade, is at this point, you want to see volume. What is that? You want to see volume start increasing, as we're selling back off. But so, yes, you want to see volume slowing down as we're coming up to our resistance level. So, Shalita, I don't know if you're trying to speak, but I'm just hearing every other word. And yeah, I can't hear what you're saying. If you have a question, type it out. Like literally, I'm just hearing one word and that's it, and you're cutting back out. So if you're trying to say something, type it. I'm about to mute you because I can't. If you have a question, type it out. I can't hear you at all. Okay, I gotta mute you. If something changes and you need to be unmuted, let us know. But basically, I tried to give you every warning possible. And it's like being muted is not like a negative thing in the Discord. It's just for some people don't know how to turn their mic off, and they'll be talking whatever to their family or whatever and distracting like the entire class. And so we have to mute those people that don't know how to control their own microphone. If you do know how to control your microphone, let us know and I'll unmute you. But for right now, it was just like, it sounds like you're trying to ask something, but literally I'm just hearing one word and then it cuts out, and then I'm hearing a word and it cuts out. And so I can't make out what you're saying, and it's just distracting. Okay. So yes, we want to see, I mean, like we want to apply everything, like Anna Cooling's volume profile. As we're coming to resistance, we want to see volume decreasing. And then that's giving us confluence that those buyers are slowing down. And it's just, confluence that that's where you want to hop in puts. And then again, like I said, at that point, you want to see volume increase as we sell off, right? All right. Well, so you just have to slow down, right? And I think the best advice I can give is like, how do I go back to where I was? Is that possible? Oh, well, it doesn't matter. In the moment, things get more difficult. And so like, this is why, again, if you follow my YouTube, there's several things I talk about. One is one trade a day. One is looking for setups when the market's closed. And for future traders, that's harder. We only have like a 1 hour window. And so what I do when I'm looking at the market when it's closed is, for instance, let's say it's already after the time that the market would open, on Sunday evening. All I do is hit replay, and I would just, go to, I can't do it right now because the market's not open yet, but I would just go to the candle, like the candle after the close on Friday, and I would hit my replay there so that what I'm watching now, there's nothing moving, right? Because when the candlesticks start moving, they're very good about messing with our psychology and making us think they're going to do something that they're not. And so it's a lot easier to look at a chart when the candles aren't moving, right? So basically, when I'm doing my analysis, I mean, you guys see it, like if you watch my YouTube, every day on SPY, I'm doing my analysis when the chart's not moving, when the candles aren't moving. I do the same thing on ES, just on my own. Um, or I don't do this anymore, but I used to. I would hit the replay feature, click it, and that way I'm not seeing candles moving, and I can analyze what I think might happen tomorrow and the setups that I'm interested in trading tomorrow. Those can change on the fly, and that's fine. And if it does change on the fly, like let's just say for whatever reason, this is my value area high, right? And I wasn't anticipating an 80% rule setup because price was trading down here. And then all of a sudden we break above, right? And it gives me the 45 minutes above. And then it starts to look like price might be breaking back inside. Or even if it does break back inside, I still have at least 10 minutes to plan my trade, right? And so at this point, you grab your short position tool and you go, hey, if they give 3 clean candles, closing below my previous day value area high, I want to wait for the retest, right? And so you have at least 10 minutes, right, to plan this and go, okay, entry if we tap here, right? My take profit, whatever, is going to be the value area low. And then for my stop loss, like, this is going to be a poor high right here, right? And so knowing that this is a poor high, if they're going to do this, they're probably going to peak above this, clean up that poor high, and then sell off, right? So I would want my stop loss to be a little bit above that. I'm still able to get at least 2 to 1 on my trade, and this is a setup I can take, right? So you as a person just have to slow down in the moment and not feel rushed to enter the trade. If you look at the chart and they've already given you your 2 5-minute candles closing below, or 3 5-minute candles closing below, and they're already retesting and then they're selling off and you missed it, don't chase it. Just wait for the next setup, right? But when you're watching it happen live, you have at least 10 to 15 minutes to plan your trade. Sometimes longer, right? Because they might give us, 6 candles below before they finally decide to give us the retest, right? And so we've got 6 5-minute candles below, and then they finally come up and tap it and do the move, right? So you have time to slow down and stop and plan out your trade and figure out, entry, stop loss, take profit. But you as a person have to slow down, right? And not feel stressed out in the moment. And hence not chasing. You don't want to be trying to force a trade that you didn't plan out. Make sense? Okay. You'll see me and Shorty, and when I say this, not bragging, nothing like that, but and I can even take myself out of this conversation and just say you'll see Shorty randomly, I'm in calls here, I'm in puts here, blah blah blah, really quickly in and out of trades. He's just been doing it a lot longer, right? And you'll get to that point, but for now, as you're learning and you're growing and you're trying to get better and better, you want to plan out every single trade, right? But you'll get to a point where, you can recognize whatever, we'll just say my entry's here, right? My take profit's here. My stop loss is down here somewhere. I know this is greater than to reward one risk without, planning out the trade. And so once you get good enough to say, hey, stop loss slightly below this, take profit here, I know I'm at a way greater than 2 to 1 on my, or 1 to 2 risk to reward. And you can just hop in the trade without planning it out. But that's something that you want to get to over time, right? You don't want to be doing that right off the bat. You want to plan out your trades, again, as you're learning and as you're growing as a trader. Okay? Any questions? Yep. It doesn't matter. Mm-hmm. Mm-hmm. I would take Trading View. Trading View. The reason is they use different calculations for everything. And I mean, you shouldn't see too often where like the lower the high is different, but obviously things happen. Um, yeah, and I would go off of Trading View. But they both calculate things different. So like I forget like a specific example to give you, but like you'll see, like if you use the clouds in Trading View, they'll be different than the clouds in Thinkorswim. Um, and with that said, I prefer the clouds in Trading View. Um, the clouds in Trading View are going to be more accurate, but for everything else, I would go off of Thinkorswim. I mean, Trading View, sorry. So basically, clouds in Trading View I would trust more than the clouds in. Um, God, I'm saying it backwards. I would trust the clouds in Thinkorswim. Everything else I would trust in Trading View. Okay? Mm-hmm. Yep. Mm-hmm. Again, so if you're looking at the clouds, I would go off of Trading View. I mean, off of fucking hell, Thinkorswim. I don't know why I keep saying that. I'm trying to confuse the hell out of you. So yeah, again, if you're going off of the clouds, so like if we're coming down to a key cloud, the quarterly cloud on specific stocks, I would go off of Thinkorswim. Anything else, I would go off of Trading View. All right. Yeah, no worries. All right. Anybody else have any other questions? All right. With that said, so like when Shorty gets back, if he gives you guys access to the full send indicator, let me know and I can give you guys that grid. Um, or I can talk to him and make sure it's okay. And if he says it's okay, then I can give you guys the grid. But you guys will have to DM him and then also DM me if he says it is okay. All right. With that said, hopefully this was informative. Don't overcomplicate the 80% rule. We're just looking for 45 minutes either above or below our value area, and then 15 minutes back inside, retest, go. That's it. Okay. Alrighty. I'm gonna end the video here. I'm gonna go hang out with my family a little bit. Market opens in roughly 2 hours, and then I'll go live. Do my analysis on SPY for if anybody's interested. And I will be trading live tomorrow for I don't know. I'm about to say for the people in the Discord, but so basically, people in Shorty's Discord, I'll be live in this chat tomorrow. If you guys want to join me, okay. With that said, I'll see you guys later. Have a good rest of your afternoon.